Hello, everybody. Thanks for coming to tonight's webinar. It's great to have you. Appreciate your showing up for our educational event. And it's going to be a good one today. My name's Jeff. I'm just going to be reading one of the legal disclaimers, introducing the guest, and we'll take it from there. So for those of you that are new, this is a real treat. Let's go ahead and get over to our legal disclaimer. You can almost start reciting it right now. This presentation is designed to introduce you to MetaStock and the accompanying software and data. It's not a recommendation to buy or sell. The information, software, and techniques presented should be used by investors who are aware of the risk inherent in trading. Equus International and Thomson Reuters shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So we got the fun part out of the way. Let me go ahead and switch back to the main presentation slides. I do want to introduce to everybody Nicole Wachs. Nicole is somebody that's just a pleasure to deal with. She's the Director of Education for TradeKing. And you should see the amount of classes that she has. She has a huge list of classes, and she does a lot of the education. I had to say, just working with Nicole, I have a lot of respect for TradeKing and just the amount of education that they do for their students and customers. And so, obviously, I wanted to make some of that available to you guys, get you introduced to her. And she's a real pleasure to work with. I just can't say that enough. Very helpful and very, very interested. So if you guys will help me welcome out Nicole, the Director of Education for TradeKing. We'll go ahead and turn the time over to you.
Thank you so much, Jeff. It's a pleasure to be here. Thank you, everyone, for joining us for this event tonight. And thanks for the friendly comments in the chat box. So it's great to be here. I just wanted to go over a couple things before we get started into the material. First things first, though, I'd like to thank Jeff Gibby for having me on. It's been a pleasure to work with him as well. And I know that he really likes to put on a great event for you guys, so hopefully I can live up to the expectations for this. Thanks to MetaStock as well for taking the time. And as a special thanks to you all, I have a special offer for MetaStock clients. And I will get into the details for that further into the presentation, so stay tuned for that. For those of you who are not familiar with TradeKing, we are an online stock and option broker. You can also trade ETFs, bonds, and mutual funds with us. We provide great service. We've been noted for our great customer service in many different magazines such as Barron's and Smart Money, Kiplinger's as well. We offer a great suite of tools covering technical analysis, fundamental analysis, options analysis, and so on. And also we are at the forefront in the online trading community. We are the first financial services company to have made available an online community and merge that with our business. It's our business. Our community is known as the TradeKing Trader Network, and we have a great way for people to share information with each other, and I'll get into that in just a moment. TradeKing started back in 2005. We have over 200,000 clients, and even though we've been around only 6 years, going into 7 now, our founders have a lot of experience and hail from SureTrade.com. For those of you who have been around with online trading when it began in the 90s, you might have heard of SureTrade. It was a very successful BD at that time. I actually was trading with Discover Brokerage at the time, if any of you guys remember that brokerage firm. As a comparison, TradeKing today charges $4.95 a trade plus 65 cents per options contract. I was paying $30 an options trade with Discover Brokerage, and that was a bargain basement price, if you will. So it's trading commissions have come down quite a bit. And finally, TradeKing is a broker. That's what we do. We don't trade against our customers. We don't make markets and securities. We don't deal in loans or mortgages or anything like that. All we want to do is provide you the easiest access to the marketplace so that you can get a good execution. As I mentioned, we have our very own trader network. You can locate that at community.tradeking.com, and you can become a member of our community. You don't even have to have a TradeKing account. It's free to anyone, and it's a really great place to find ideas and just discuss some of your strategies with other people, get feedback, and you could also follow other people's performance and what they're trading. We have a feature called Certified Trades where if people want to share their trading information, they can. And what we do is we publish that information for the individuals. It's called Certified Trade. So if someone is saying that they actually have traded something, if they're saying they did this trade or that trade, we actually know that they did. And so it would only get published if it was actually a part of their account. It's not something you have to do. It's if you choose to participate in that piece of the Trader Network. We also post a lot of free content on Twitter, Facebook, YouTube, and LinkedIn. So please join us on those venues as well. In addition to that, we have our TradeKing Education Center located at tradeking.com/education. And if you have any feedback or things you'd like to see, please let me know. You can contact me at webinars@tradeking.com. All right, so now let's get to the material that I've promised to share with you. And I'd like to set some expectations for what I'm going to cover here. So this presentation is from a high level. It's talking about getting a plan together and how to move forward with that plan. I'm not going to get so much into the specifics, but I'm going to kind of set the landscape for you. And tonight's discussion is going to focus on getting your outlook based on direction, news, and time, and some things that you need to consider in order to form that opinion. And then parts 2, 3, and 4, if you're interested, get much more into the options elements, specifically focusing on how in the world do you deal with 40 or 50 or more option strategies and get that to a manageable number so that you can actually make a decision of what you're going to trade. When faced with how many choices you have in options trading, it can be overwhelming. And so I provide a step-by-step process in how you can get that to much more manageable 2 or 3 choices, and you can really understand what you're working with. Before we get to the material, I do have my own disclaimers. Don't worry, I'm not going to get into all of them, but just so you know, options involve risk. They're not suitable for everyone, so please visit tradeking.com/ODD to review the option disclosure document. And anything discussed here tonight is for educational purposes only and is not any type of recommendation. All right, so as we get into this material, let's have a discussion about some of the things that I think are important. And one of the ways I'd like to do this is to use an analogy. So let's say you're going on a trip. There are many questions that may come to mind, and you may not even realize that they're questions because you're so used to doing this on your own. It's all second nature. For example, you never really think, oh, where are you now? But that is important in deciding how you're going to get to where you need to go, right? So you need to know where you are. You need to know where you want to go. And you need to know how long you plan to be gone. And that's going to be a function of how far away the destination is from your current location. The other thing that you're going to have to contend with is, well, what's your budget, right? You don't have an unlimited amount of money to spend on this trip. Now, we all would like to think that vacations and trips are without any problems, but if you've ever gone on vacation, I'm sure you've had a problem or two. And so you need to think in advance what could happen along the way, because you'd like to prepare for that in advance, right? If you're driving somewhere, you don't want to be traveling without things that can handle a flat tire or some basic repairs on your car, and also you're going to perform some basic maintenance before you go. Another thing is, where's the weather where you are today? Because that's going to impact the clothes you wear when you leave for your trip. But the other thing is, you need to know what the weather is like where you're going so that you can bring the appropriate supplies with you. And also, if there's a storm that's coming up, maybe you need to reschedule your vacation. Now, the thing is, when you go on vacation, you have lots of activities you'd like to do, right? Well, you might have to bring some equipment. So if you know in advance, you can maybe bring yours along, or you know where to rent some equipment nearby when you get there. But again, you still might encounter some problems. What if you get sick, or if you get a headache? And it's good to be prepared so that you can get the most out of your time during your travels. And a very important consideration is, how are you going to get to your destination, right? And again, that's going to be a function of how long you're going to be gone, how far it is from where you live, and so on. Okay? Now, to have some fun here, right? If we're talking about going to visit your relative in the next town, well, maybe you could drive. Maybe you could ride a bike if it's fairly close. But if you're talking about visiting someone in 2 states away, or so on and so forth, you're going to have to consider different ways to get around, right? And if you're traveling long distances, maybe an airplane. Hey, and maybe, who knows, maybe we'll be able to travel by spaceship at some point. But the point is that you need your means of transportation, your vehicle, has to be suitable for the trip that you're expecting to take. Now, when we're talking about trading, so many of these things apply to trading. And so let's go through them and go through the similarities here. So what's the price of the security that you're planning to trade today? That's important because you need to know where you're starting from. And then the other thing is, what's your target price? This is something that I think a lot of people don't necessarily think about. They just come up with a direction. They say, I'm either bullish or I'm bearish, and I'm going to go long or short. But that's not specific enough, because you need to be ready for when it happens, right? So one way to do that is to come up with a price target for the future. Now, the next thing is, how long do you expect it to take to make that price movement? Now, we don't have a crystal ball, right? But you still should have some idea of what you think will happen, because that can also impact the other decisions you make along the way. If you're trading options, that's a very important consideration because you're selecting an expiration month. The other thing is, well, how much money do you have? Or rather, what is your working capital? And how much of that capital do you want to put at risk? You're not going to put the whole thing on the line, right? This is not like Texas Hold'em where you go all in. You need to know, you need to manage your exposure so that if the trade doesn't work out like you expect, you can come back and fight another day in the markets. Always got to think about what problems can happen and how you can prepare. For example, One problem might be that you fat fingered your order, which has happened to me and many other people. You need to know what are the different ways that you can remedy the situation. Is it by phone? Do you have your broker's phone number handy? Is it only through the website and you have to send an email, which is not the case with TradeKing. You would just call us and we'd work with you to get the situation resolved as quickly and painlessly as possible. But these are things that you should think about because something like it may happen to you and you don't want to be digging through your broker's website for the phone number. What's going on in the market today? What's going on in a particular security that you're interested in? Is it stable? Is there, the constant activity of buyers and sellers that it's been experiencing for the past months or years? Or is it in a fast market? Is it got suspicion of mergers coming up or bankruptcy or something like that? That's going to affect the conditions that you experience when you try and place your order or get out of the position that you have. And what do you think these conditions will be in the future? Okay, always thinking about where you are today and what do you think is going to come up next. That's what this whole thing is about. And again, with the idea of just having you prepared. You're not going to know what's going to happen. You're just trying to be prepared the best way you can. So once you've estimated how long you think you're going to be in this trade, you need to think about, well, what actually might happen while I'm in this trade? And there are things that are known that you should be aware of. For example, what if the company is supposed to announce earnings? Well, you should know when the earnings announcement date is. You should have that marked down on your calendar. And so that may factor into the type of holding period you want to use for the security. It may say, yeah, I want to hold through earnings, so I might go longer. I want to hold shorter. I don't want to be involved in earnings. I want to wait till earnings has passed and then I want to get in. And so in order to make these decisions, you need to know when the date is. If you're not aware of it, then in fact, you've made a decision, you just don't know it yet. So it's better, much, much better to be informed up front. Another thing is, what if the company is paying a dividend? And these type of considerations affect different types of vehicles that you might be trading and different time frames. These are just some things to think about. And again, you're not going to be able to prepare for everything. And that's one of the things that you gain over time for experience in the markets, is that you start to see different circumstances that you didn't see before. And then when they happen again, you have a point of reference and experience to draw from. And so that's something that counts against the beginners, if you will. But you just have to try and think about what can come out. And two main basic things would be, say, what if they pre-announce earnings, they're going to miss their number, or there's been some accounting irregularities, or maybe they're contemplating a merger, or maybe they're having a cash problem. And these are things to consider. And you won't know what to do every time, but you just gotta have a way to take action so that you can come back and trade again in the markets. So this next question, what type of security and what kind of strategy is appropriate? This especially is a very personal question. And this, I think, speaks to the personality of the person trading. It speaks to the experience level. It speaks to the knowledge set, and also capital and resources that are available. So, but this is something you have to consider, what's appropriate for you. And not many people think about their personality when it comes to trading. But sometimes a slower moving vehicle is better suited for certain individuals. And with others, they may do better with volatile vehicles, things that move very quickly or erratically. Some may do better with options or futures or whatever it is. And that does take some time to get a handle on. But these are things that you should think about. And then not only what the vehicle is, but what is the strategy? And especially when you're talking about options, the, the combinations are potentially endless. And so it's easy to get overwhelmed, but you just got to take a step back and think about what's appropriate for what you know today so that you can work within that circle. And then once you feel comfortable stepping out of that comfort zone, then you can move on to other securities and other strategies. What will you do if you actually accomplish what you want? Okay, so not only do you have to pick the target, right, but you also need to think about, all right, well, if I hit that target, what am I going to do? Now, it should be to take action of some kind. I can tell you countless stories of conversations I have had with clients that say, you know, I had this trade on and I wanted to make 10% or 20% on the trade, and I did, and then I decided to stay in longer because I wanted to make more. And then the trade started to go south. And then I was only up 15% instead of 20%. So I told myself that if it gets back up to being up 20%, then I'm going to get out. But what do you think happened? It never got back up 20%, right? It started to slip further, and now it was only up 10%. And then the client says, yeah, and then if it gets back up to 15%, then I'll get out. And then it didn't. And it kept slipping further and further and further. And the person actually ended up exiting the trade for a loss, which is the worst feeling in the world. I mean, that's even worse than just, the trade going south on you right after entry. I think it's worse to lose money after you're making money in the trade. It's really bad on your morale, your focus, your concentration. It's one of the worst. If anyone out there has experienced this, I'm sure you can relate. So this is why it's important to set the target and know what you're going to do when you hit that target, because you never want to be in a situation where a winning trade becomes a loser. It's just demoralizing. So what's the action? Are you going to liquidate 100%? Are you going to liquidate 75%, 50% of the position? Or what are you going to do? And have that written down on paper to keep you honest, or typed in your computer in a plan of some kind. The other thing too is like, what do you consider successful or unsuccessful? Is it a series of these trades? Is it, making money on 4 out of 10 trades, 40% of the time, 50% of the time? Is it just being up P&L wise, and you're not so concerned about your average? These are things that you need to figure out. A great book I'm reading right now, it's called Trading Risk. I don't recall the author's name. I think it's Kenneth something, but he's a very successful risk manager for some of the top hedge funds over the past 20 years. And it's really been very helpful to see how to systematically deal with your risk, as opposed to any gut feeling or just roundabout percentages. It's very systematic. The name of the book is called Trading Risk. If you go on Amazon and you punch up Trading Risk in book, it'll come up. I believe the author's first name is Kenneth. Yeah, Kenneth Grant. That's correct, Jean. Thank you. All right, so how are you going to get from point A to point B? And that's what we're talking about here. Not in the little details, but in the big picture of things, okay? And to me, that's what is important here. The 3 most important words in trading, except for risk management, are outlook, outlook, and outlook. And so what I've laid out here are the different things that I will cover in this series or in a future series, and which part it occurs. Okay, and if you would like a copy of the slides, please send me an email at webinars@tradeking.com, and we will get those slides out to you in PDF. So you have the list of the topics for the series. And also, if you'd like to view the future parts that I have scheduled, and you don't want to wait into the future, I have the recordings available on the TradeKing website as well. Okay, so I'm just showing you the topics really quick because I want to get to what we're talking about today. But basically, I'm just trying to lay out everything across from, starting with the underlying, starting with direction, news, and time, and then going into implied volatility for options trading, and then the Greeks, delta, gamma, vega, theta, and then finally how to put the first three parts together into a strategy cheat sheet that I've created that will basically help you choose the strategy you want to trade with options in a real systematic way. The thing is, though, I can't give you the cheat sheet first. So, because if I do that, you won't understand the logic behind it in order to choose it accordingly. So I need to explain everything first, and then in the end, you get the prize of the strategy cheat sheet called the options play box. So, so part one is tonight. Thanks to Jeff Gibby and MetaStock for having me on. And then part two, I've already set up with Jeff. I'll be back February 9th, 2012 at 7 p.m. Eastern Time, 4 p.m. Pacific, right here on this platform, and we'll cover part two, which will be on implied volatility and how to get an outlook on implied volatility in the options market. If you'd like to watch parts 1, 2, 3, or 4, please visit tinyurl.com/TradeKingStrategy, and you have access to the recordings there. All right, so let's get to part one. So here I'm talking about your outlook on the underlying, okay? So in this case, you already have a security in mind that you want to trade. Some of the methods here can help you find securities to trade, but that's not the focus for tonight. So I just wanted to make that clear up front. So this is something you already have in mind, okay? And these are several things to consider. One I have up here is the economy. And if you'll notice, I start from the bigger picture and work down to the smaller picture and narrow the scope as you go. And that's true for probably all of the items that I will talk about going forward. And so the thing is, though, you need to put this in perspective of what you are trading and how long that trade will last. So the longer the trade duration, the longer you're in the position, the more important the bigger picture becomes. And so the economy then plays into that. If you're trading much more short term, the economy tends to become less important in that particular trade. Except if you happen to be trading on the day when a slew of economic data is released and it is not at all what anyone expected, which could cause the markets to move in a way you weren't expecting. So, just because something is big picture for the most part, it doesn't mean that it can't impact your very short-term trade. Depending, unless you're paying attention to news releases and things that are scheduled to come out on a particular day. So things to consider include the economy. Then the next thing that I would look at is using technical analysis, which I'm sure that many of you are familiar with since you are MetaStock clients with your charting packages. Third thing would be fundamental analysis. And as you can see here, I'm talking about using these things together. I'm not using them separately. So again, fundamental analysis, becomes more of a factor the longer term the trade is. But it depends on, did you happen to catch the release of earnings on a particular day, which is talking about, what is the fundamental financial situation of the company, and that affected or impacted the trade that you're taking. The next thing would be news and the calendar. And finally, what is your perspective and time horizon? The URL of the recordings is, all right, it's tinyurl.com/TradeKing strategy. Thank you for the question. All right, so let's continue. And as I mentioned, I start with a broader view first. And so here we're talking about the economy. Now, to be fair, okay, unless you are an economist, it's hard to get data on the economy that you can understand in English, okay, or whatever is your native language. So it's not the easiest thing. I will grant you that. And so one of the things that you can do in looking at the global economy, if that plays into the security that you're going to trade. So global would be, what's going on in the whole world. Local would be what's happening in the home country of that company. And then getting into the local market conditions of that country. Not just the financial market conditions, but what about the consumer market conditions, if that plays a role? And then next, talking about what's impacting the sector, the industry, and then finally getting down at the company level. Now, here are some things to consider. What's happening in the global economy? What's happening at the country level of the company's home country? And again, I'm always thinking about where are we today and what do I think is going to happen in the future, and the future being the time period that I'm holding this position. Market conditions, same thing. Okay. What's going on in the sector? What's going on in the industry or the subsector or the sub-industry? What do you think is going to happen next? And then finally getting into the company conditions. And what do you think about news that might be coming out, just as a precursor before getting into full-on news evaluation? So the next thing is technical analysis, but let me clarify something back on the economy. And many people don't even realize that they're doing this, but this is really common practice. So if somebody oftentimes people will use a benchmark index, the chart of a benchmark index, as a proxy for the behavior and performance of the economy of that benchmark. Okay, so what I'm saying here is, for example, let's say SPX. Jeff, do you have a chart of SPX?
I believe I do. Let me pull it up real quick. How's that look for you?
Okay, great. So here's a chart of SPX, and it looks like a daily chart, almost a year long. And we're down from where the picture began all the way at the hard left. Thank you. Let's see if I can remember how to use this tool here. Is it working? Am I able to? Am I moving the arrow appropriately now?
You are.
All right, perfect. All right, so we're at the left side here at the beginning of this year, and compared to where we are now, the market is down some. It's been quite choppy, as you can see. And so, what people will infer from this chart, who aren't even technicians, if you will, but they'll make assumptions about the US economy based on what the SPX chart is doing. Okay, so this is another way that you can make an economic evaluation if you're not an economist. All right, so let's see here. Okay, so to get into the technical analysis part, you're going to start again with a broad scope and then narrow your view. What's happening up at the big picture level, and then drilling down into lower levels and so on. And so even though I may have a security in mind, to help me know what the next step is, right? Because I need to know what security I'm trading, so I know what sector to look at or which industry and so on. But if I don't have that in mind, I can actually get ideas of what to trade by starting at the major indice level, say SPX and NASDAQ Composite, because those are, you're talking about big numbers of stocks here. If you're a little overwhelmed by that, you can also do the S&P 100 or the NDX, which is the NASDAQ 100, and start to look at those charts, and then look at, say, the 15 or so sectors underneath there, and see what's performing and what's looking strong, stable, sideways, choppy, down, whatever it is. And then if you know what your comfort level is at this point, are you more comfortable going long? Well, if you're seeing a bunch of chop or a lot of downward trending markets, maybe you need to step aside. If you are comfortable on the short side, then maybe that's your time to shine, and so that's just a way to kind of get ideas in order to trade, as opposed to starting with an idea in mind. So, but let's continue. I got a little off topic there. So this would be a top-down method to start with for technical analysis, and most likely, again, using it as a proxy to evaluate economic conditions. So you'd start with our global index, or maybe you look at several country broad-based indices. You start with maybe SPX, and you look at the DAX and FTSE and so on, just to get a perspective of what's going on around you. And then again, get to the home country symbol, which in this case might be SPX if you're looking at a US equity. Jeff, you have any stocks in mind? Anything you were looking at today?
Yeah, I mean, there's a couple that everybody likes to look at, as you know. Why don't we talk a little bit about like Apple?
Apple, a company I've never heard of before.
Yeah. They're kind of based up here in Northern California.
That's right. So, so in the case of Apple, let me see here. I actually need to go back a moment. So if I come back just for a moment here. All right. So let's say you're interested in Apple. Before getting to that stage, right? You started off with SPX as your broad-based local index, but then really though, Apple is a technology company, right? So I would actually look more at the NASDAQ Composite chart as the index in this case. Let's see here. Maybe you have that in here. Oh, here we go. And, kind of take a pulse on how is the broad-based technology index looking. And NASDAQ composite is just one example. So that would be the big picture item. Then next would be looking at the technology sector. Now, one of the things that also people don't realize that they're even doing is there are so many ETFs today that they actually, it's like they create sectors and strategies just so that they can create the ETF to trade them. Now, I realize XLK has been around a long time, but that one was something that you might want to consider to evaluate for your analysis of Apple. Just checking over the comments here, make sure I wasn't missing any questions. But taking a look and like, let's go through the process a little bit. So let's say you started out with the NASDAQ composite. Overall, it doesn't look that much different from the S&P. Choppy, sideways, possibly getting ready to turn down again. It's hard to say here, but not looking too inviting. But if you look that let's see, this is different symbol. Hang on. This is XLK, and this actually looks a little better, but also still looks like it potentially could be getting ready to take a nice move down. So again, just trying to get perspective for the sector. I don't have any. Jeff, do you have any symbols that come to mind for an industry ETF, like say consumer electronics or anything like that that would work here for Apple as the industry group?
I don't. That kind of puts me a bit on the spot. I'm trying to think of one that you could look at that would be just like a industry group for Apple. Maybe somebody in the audience might be able to help.
Yeah, sure. I mean, I can't think of any off the top of my head. I mean, sometimes you can't get to the industry level, and so it's just something to keep in mind. It all depends. Some sectors are larger than others, and they have more industries within them. So, um, it's
Well, we
definitely.
I think this one right here, the technology select sector, that might be something that would fit well with that.
Yeah, that's probably the most granular I can get, I think, before getting to the actual stock chart. Um, before going to Apple, for example. So, um, but yeah, nothing is coming to mind here. But XLK is one of the most popular technology sector ETFs out there. Um, so you know you can use that the chart to get a gauge of what you think of the sector in general. So let me see here. All right, and then like I said, the industry and then to the specific company. Now, when you're doing your technical analysis, obviously you have several things to consider, and this goes to your skill level and experience with technical analysis. But you're going to start out with the basics, such as the price action or market action and the volume, your chart patterns. Then you're going to get into support and resistance, trend lines, and then technical studies get layered on top of that. But you got to start with the basics. And I know that MetaStock does provide some resources for training and so on. But if you would like additional materials, we do have free content on our site that's available to everyone. You don't even need a login. And so I've set this up to give you the materials that we have for technical analysis. This one is tinyurl.com/TK Tech Analysis. Again, if you'd like a copy of the slides with all the URLs that I'll be giving you with access to additional resources, just send it to webinars@TradeKing.com. The next thing here is fundamental analysis, and I realize that this might be new to consider for this group, but it may not be. Excuse me. And so, to give you some examples here, some things that you can consider for fundamental analysis. There's a whole bunch of different types of ratios, which is number crunching and so on. The first batch is usually the market value ratios. That's when you're getting into what's called PE, price of the stock compared to the earnings of the company. And there's certain gauges on using those ratios and what high ones and low ones mean or infer. Another set of ratios have to do with how well the company's actually doing business. How quickly can it turn over the inventory? Jeff, I think your mic is still on.
Oh, okay. Well, I'm glad I wasn't talking too loud. I'll just type in.
And so, how quickly is the company turning over its inventory, or that kind of thing, or how quickly is it getting paid, and so on. Another item would be how much cash does it have? Does it have enough money on hand to pay its bills? And that would be the liquidity ratios. And then finally, the last one that you might consider would be having to do with the company's debts. Is it saddled with debt? Is it too leveraged? Has it taken on too much risk and now it's got to pay back all of these loans or bonds and so on? If all of that seems somewhat too involved for you, we do offer a free tool called Market Grader, and you can actually get a report based on fundamental information generated for you for a specific symbol. You just enter in the symbol and then it produces the PDF with the content that you need. The other thing that it does, though, is that you can also do scans based on fundamental analysis. So if you're looking for companies that are fundamentally sound or poor, you can get symbol ideas as well. All right, so the next item here, this is talking about news and market events. Okay, so first we're going to talk about what you know is coming up. And the most obvious is company earnings. So in the case of Apple, I think they released not that long ago, the next one coming up, say mid-January. So if you are placing a trade or holding a position in Apple or planning to, you want to know when the next earnings announcement is, so that you can decide, like I said, make an active decision about, do you want to be in the trade or not when earnings are released? Does it shorten your time frame? Does it make you want to delay the trade? Does it make you want to find another trade? Does it make you potentially want to trade more because you think you have a feeling of what is going to happen as a result of the earnings announcement? These are things to consider. Now, the other thing that you may not realize is you want to evaluate if a close competitor is going to release earnings soon as well. One of the easiest cases to explain is if you're trading Home Depot and Lowe's is supposed to report earnings next week. So you want to be aware of those things, because if those companies comment on industry-wide factors, well, and it had a positive or negative effect on the earnings they're reporting, you can be sure that it's going to have some effect on the position you're holding in a different security. Another item, this is bigger picture than earnings, but we're talking about the Fed. The next Fed meeting, I believe, is next week. And depending on the type of security you're trading, it may have a minimal effect, it may have a big effect. It also depends on how heavily is the news going to be anticipated. Sometimes the market feels like it already knows what the Fed is going to say before the Fed says it. And so the build up to the announcement is not really that much, and people don't really care because they kind of know what it is they're going to say. Other times there could be a lot of uncertainty surrounding that announcement, and so that tends to have a bigger effect on securities when the announcement comes out, especially if it is different than what was anticipated. I remember I was just about to go into a new pit on the trading floor, and the product I was going to trade was network appliance. The symbol was NTAP. And I was observing the crowd to kind of view the personal dynamics that go on between market makers. And while I'm standing there watching, the Fed announcement comes out, and it was expected that the Fed was going to drop rates by 0.25%. Well, what actually happened was it dropped rates by 0.5%. The market rallied, I don't know, 300 or 400 points in the next 15 minutes. So everything went just haywire. Everyone was screaming and shouting, and people were running everywhere, trying to place orders and so on the trading floor. This was on the American Stock Exchange. And you know, it's just, again, it all comes down to what was the expectation and then what actually happened. And it was very different than what was expected. So the reaction to it was much greater. All right, now, other things for news, economic reports, you know, unemployment, you know, first Friday of the month, that kind of thing. And I provide a link here to an economic calendar so that you know where to find this information. Another thing would be, what's the economic report that might be coming out for what you're trading? So, for example, let's say, you know, you're trading a retail stock. Well, the same store retail sales report comes out at a certain time. You should be aware of when that's supposed to come out and what the expectation is. If you're trading oil, you know, futures or oil ETFs or oil company, another piece of information that comes out on Wednesdays are the inventories, right? What are the levels of what we have in inventory? So, you know, you're going to want to be aware of what are the reports that come out, and and if they have a potential impact on what you are trading. You know, you may not even realize a report comes out, and you know, it hits you, and you're like, oh, I'm never going to make that mistake again. You know, try to minimize the mistakes you can up front. As the saying goes, there isn't enough time and enough money to make all the mistakes yourself, right? So you got to try and learn from other people and try and prepare yourself as best you can. Another thing you want to review, and what I'm talking about here is, you know, if we go with Jeff's thoughts on Apple, right? Let's say you wanted to place a trade on Apple. You know, take a look through the headlines of Apple News over the last couple of months. You don't need to read the articles. You just need to skim the headlines, and that'll give you an idea of what's going on. In the case of Apple, if they were involved with a merger or takeover, you'd probably know because it's so mainstream. But if you're trading a smaller stock, a smaller company, that's going to be much more important because it's most likely going to have a smaller market cap. It's going to be easily moved by a larger company if it's going to get taken over. So you want to know what's going on. And it may be that the company's already involved in a merger and it hasn't completed yet, and that's maybe why something is showing on the chart that looks interesting to you, but actually what's happened is it's already in the middle of a merger and it's going to close in a couple of weeks, and there isn't much potential gain there, but a lot of risk if the merger falls apart. So things you want to be aware of, what's going on. If you're trading a drug company, do they have anything from the FDA that they're expecting? And also, does the company pay a dividend? This may not impact your trade, but it all depends on what you're trading. If you're trading options, it's a good idea to know when the dividends are. I don't think, for example, we were talking about Apple. I don't think Apple pays a dividend, so that wouldn't be a consideration. However, if they then announce that they're all of a sudden going to start paying a dividend, that would be an important news event in this case. So just keep in mind what's going on in the news. Check the news 1 or 2 times a day at minimum for the positions that you have open. If you're trading options, you need to be aware of when expiration is, the dates, and the times, because they're not necessarily the same for all the different products that are out there. And so here are a couple links for you. This one, I happen to use the MarketWatch economic calendar, so I set up a URL to take you a shortcut right there. And for FDA announcements, if that appeals to you, trading biotechnology stocks and so on, I go to the street for that. But these, just keep in mind, these links may not work forever because they're a shortcut to another website that's not under TradeKing's control, but just a place to give you some resources to get started. All right, the calendar and seasonal analysis. So as you might have heard, we're in the holiday shopping season, right? And sometimes people will decide to get into these trades based on, say a month ago, based on what's happening right now. So that's something to consider. If you're trading an all stock, maybe you're mindful of when the summer driving season begins, and you're trading that in advance of oil prices ticking up because they're going to tick up at the pump. Whatever is the season that might have some impact on what you're trading. Again, just to be aware of the different influences that can come about. You're not going to account for everything. Okay, it's just to know what's going on around you so that you are informed. And then finally, time horizon and perspective. Is this a short-term trade? Is this a long-term trade? Okay, and this, let me stress this. You are establishing this up front before you actually make the trade. Let me repeat this. So, for all the questions that I'm throwing at you, you're actually thinking about them, or you're supposed to think about them, before you ever put your money on the line, before you ever take the trade, okay? Because what you're trying to do now is be objective and plan and say, if this happens, I'm ready to do this, and so on. Once you pull the trigger, and you're in the trade, and your money is on the line, and unfortunately, probably your ego too, once all those things are on the line, your gut's there, you got the emotions going, no matter how much you try and minimize them, if you haven't written down what your action points are, it's really hard to come up with them in an objective way. The point that you have the most neutral opinion and objective insight is before you ever take the trade. So the reason I'm mentioning this now, though, is another thing that I have been told time and time again by clients, and I've done it myself too, I'm not going to lie, but not lately, thank goodness, is that you decide it's a short-term trade, you take the trade, it's not working out, and then it becomes a long-term trade because you think the stock's going to recover, or you hope it's going to recover. Okay, so that's not a plan. Okay, that is a recipe for disaster, as I like to call it. So you need to do this in advance. Okay, short-term trades are short-term trades, and long-term trades are long-term trades, unless you have a profitable reason for changing it. And again, as I've been saying throughout, your time horizon has to match up with all the other aspects that we've already talked about. And how much time you plan to take in a trade is going to impact all the other things. So what I'd like to do is say thanks. This wraps up part one for my series, How to Choose Your Strategy. As I mentioned, part two is about establishing your outlook on implied volatility. And if you'd like to participate, part two will be here with Jeff Gibby on February 9th, 7 p.m. Eastern Time. And you can also access the recordings to all the parts of this discussion at this URL, tinyurl.com/TradeKing strategy. And last but not least, as I promised, TradeKing has a special offer for MetaStock clients. If you open an account, you'll get $100. As I mentioned, we have really cheap commission rates, $4.95 a trade for stocks, and for options, it's $4.95 a trade plus 65 cents per option contract. If you are trading more volume than 8 contracts at a time, that per contract cost drops to 15 cents, as in 1.5. And the base charge goes up to $8.95. If you're trading any multi-leg strategies or spreads, we only charge you one base charge. So in the past, for example, if there's any advanced option traders out there, for an iron condor, it used to cost $45, and now that trade costs about $15, so a substantial savings. Here's what you need to do to take advantage of this account, of this offer. Open an account at TradeKing using this URL, tinyurl.com/TradeKing offer. Fund your account within 30 days with at least $3,000. Make 3 trades within 3 months of opening. So just remember 333, and you will be in business. I welcome you all to come to TradeKing. We'd love to have your business. If you have any questions, please email me at webinars@tradeking.com. And I'd like to turn it over for any questions. Jeff, are you still with us?
I'm not going anywhere. Yeah.
I know from hosting these myself that sometimes I have forgotten to unmute my microphone and I'm there talking and no one can hear me. So
Yeah, absolutely. We did have a question from Ananda. I don't know if you can even answer it though. You had to remember that with TradeKing, obviously, it's got a lot more. What would we say? They had to conform to a lot higher of a legal requirement with the SEC, and being the fact that they are registered brokers. But Ananda does ask how many trades do you make at a time? And I think a fair answer to that is I can't answer it if that's the most appropriate answer, Nicole.
Unfortunately, I'm not supposed to talk about trading. What I can do, I can talk about what I used to trade before I worked for TradeKing. I was a market maker. So, gosh, I was an options market maker. We were trading all day long, trading options as the primary vehicle and then hedging with stock. And so, gosh, I'd have how many trades a day? It'd be in the hundreds, I'd say. I don't think I ever counted. Some days busier than others. I did do some personal account trading prior. I'll talk about anything before TradeKing. So I traded more of a position style. You know, my trades were in options as that was my background. And they lasted, I would say, usually I would go with the cycle. So anywhere from 30 to 60 days, closing out, a week to go to expiration or so, something like that.
And now, one of the things that I would like to kind of request on behalf of everybody that's attended, I mean, I know you've got just literally hundreds, probably tons and tons of recording. Maybe not quite hundreds, but I know there's a lot of presentations you've given. I've seen the list of the presentations you can give. I'm wondering if we can include a link to maybe some of the archives that you've done on around those, because I think there's a lot of people that would really like to see that.
Sure. Let me
And we
see
can
if.
actually, if you don't have that relatively handy, just email it to me and I'll include it with the email that goes out tomorrow.
Okay, sure. That would be great, Jeff. The best thing would be, I mean, I'll give you a link, but if anyone is interested right now, I can give you a link to our video archive. And we have probably close to 200 recordings there. Let me see here. If I type it in here, it'll show up, right?
Yes, well, it might. It looks like Adobe's been taking out the web links for some reason. I don't know, but it's showing
Oh.
up right now. So,
Okay, so TradeKing.com/education and then /list/video. Sorry, it's a little cumbersome, but I'll be sure to email that to you, Jeff, and you can include that. But I
Michael asks,
appreciate the interest. Thank you.
what is TradeKing's relationship to MetaStock? Do you want to comment on that?
Basically, we call it a cross-marketing relationship. We had Jeff on a couple of weeks ago, and he did a webinar about MetaStock for TradeKing clients, and now I'm here talking about TradeKing to MetaStock clients. So,
Yeah. Actually, the webinar I did was my very first time I've ever talked about this. We talked about an introduction to technical analysis, and it was a kind of a fun topic. So, anyway. Anyway, I think that's good. Let's go ahead and Michael B's typing. We'll see if he's got a question, and I think we'll wrap it up for today.
all right, well, if there's no
You just said
further
thank you.
questions, I just wanted to say thank you. If you'd like to contact me, please send an email to webinars@tradeking.com. And thanks again to MetaStock and to Jeff for having me on.
Thanks, Nicole. Great to have you again. The relationship that we've got with TradeKing is really to kind of provide cross-educational opportunities like this. So it's really hopefully to benefit you guys. I can say this about TradeKing: if you're looking and you're not very happy with maybe like your current broker, they have a very, very good reputation in the market. $5 a round turn, I think, is what it said on that slide. It's a really, really good rate for a trade. And $100 credit, hey, that's not too bad either. So I'd encourage you, if you guys are looking for a broker, it's definitely something we could kind of stand behind, to say the least. So anyway, thanks for coming, everybody. Nicole, it was great to have you on tonight. We look forward to part 2, and we'll see you then.
Great, thank you, Jeff.